Let's get back to the basics. Piyush, can you explain the concept of rupee cost averaging and how it contributes to reducing the impact of market fluctuations on the overall cost of investment?
Right. So I think we have touched upon the qualitative benefits, which is in the terms of investor biases and systematic, disciplined investing. One of the primary benefit of investing through SIP is rupee cost averaging, and the way it works is you when you're investing over a period of time. There are times when markets will be up. There'll be times when markets are down. As and when you're investing at the time when the markets are up, you are accumulating less number of units. But whenever the markets go down, at that time, if you invest, the number of units which are accumulated are more. So in a way, over a period of time, you accumulate units at a higher number of units at lesser price and lesser number of units at more higher price. And that's how the rupee cost averaging work. If I were to explain it with the help of example, let's assume investor has opted for a SIP of say 10,000 rupee for a period of 12 months. Let's assume the first investment happens at an NAV of say 20. That means the investor accumulates 500 units in the first installment. For the purpose of illustration, let's assume the next month the NAV goes down to 10 rupees. At that time, the investor would accumulate 1,000 units. Now, if you look at the NAV for the two installment, the average price comes out to be 15 rupees. But when you look at the total amount that has been invested, it's 20,000 rupees. Uh, and the number of units which have been accumulated is 1,500 units. If you take a ratio of that, the weighted average price comes out to be 13 rupees, 13.33 rupees. So effectively, you are purchasing or accumulating units at a more efficient manner at a price which is lesser than the average price during the course of the SIP.
All right. Let's get some more knowledge in for our audience because they hear a lot of terms, especially when it comes to investment vehicles. So, Shalini, if you can elaborate on the concept of top up SIPs and how they allow investors to adjust their SIP contribution as their income increases.
Right. So top up is a what you can say a variance or a functionality on a SIP plan. Usually, most investors, do get a monthly income, and they like to make a SIP or an investment commitment that if my income is this, I will make a SIP or starting from now for 10,000 rupees for a X number of years towards, like, if there is a goal or if there is a milestone, 3 years, 5 years, 10 years. And most of us do have incomes which because India is a growing economy, we do have the fortune of salaries growing at a good rate. The top up SIP is a instruction that you give or you commit to, saying that if I start with an SIP of 10,000 rupees, for example, I can say that after a year or after 6 months, please top up my SIP by a certain amount, so 1,000. Or I could even, for example, say that a 10% increase of my SIP should be done. What that allows an investor to easily do again is it somewhat cements the discipline that you have, or a commitment that you have made for making a certain investment amount, and that is in relation to your income or in relation to your goal achievement that you would like to do. It also simply takes away any ifs and buts or any kind of emotions that may come up once we get a salary raise, saying that, oh, how should I spend this money. It kind of cements the discipline in making sure that some of that increment or salary increase or monthly income increase goes towards your savings and your investments in a certain amount. So it's a good plan to look at.
Absolutely. But part of that discipline is also knowing what's working and what's not. So, Dilshad, let me come to you for this question on how frequently should retail investors review their SIPs, and what factors should they consider when making adjustments?
Right. So I think in the market that we are in today, where everything is buoyant and going up, I think the discipline on understanding how well your SIP is performing and whether profit booking needs to be done. So yes, one is definitely look at a profit booking as one instance where you need to relook at your SIPs, or possibly rebalance the portfolio because of your asset allocation not being in line with your risk profile. Or it could be also a reason where you are nearing one of your goals or two of your goals, and you had earmarked certain SIPs for those goals, and therefore you need to take a kind of a stock or a check on what needs to be done today to ensure that these SIPs are going to be lesser volatile compared when the goal actually realizes. So typically 6 months before the goal, we recommend that people move it from an equity kind of investment to something which is less volatile, to ensure that their portfolio is protected, and when the money is actually needed, it is available without any fall in value or less volatility as such.
All right, let's tie up some loose ends in this conversations before we wrap up. Ashish, your point of view on the role that equity-linked savings schemes or ELSS play in tax planning, and how can SIPs in ELSS funds offer a tax-efficient way to save for long-term financial goals?
Sure, Gautam. So I think ELSS is, in my view, the single best product in Indian financial landscape, right? And I'll give you three reasons why I think so. So first of all, if I compare it with other tax saving options, it comes with a minimum locking period. So you take 5-year fixed deposit or NSC or insurance or PPF. ELSS is the only one which has only 3 years of lock-in. Number two, it is very convenient to set up an SIP in an ELSS as compared to, let's say, PPF or again NSC or FDs, right? You just have to go fill a form, sign a mandate. You can do one monthly, weekly, quarterly, or even annual SIPs. The third and the most important thing is an impressive track record. And here again, let me give an example. So let's assume we started investing in ELSS in 2009. I'm taking 2009 because I'm comparing this with PPF, which has a 15-year horizon, right? So let's say I invested 1 lakh rupees in PPF starting 2009. So by 2023, I would have invested about 15 lakh rupees, and the value today is about 27 lakh rupees. Now, alternatively, if I have taken any ELSS scheme, right? I'm here not even talking about the best performing scheme, any ELSS scheme, the lowest return has been about 38 lakh rupees, and the best return is about 63 lakh rupees. So the fact of the matter is the lowest performing ELSS scheme has done 40% better than PPF, right? On an average, it has done 65%, 62% better. And I don't even want to talk about the highest performing scheme, right? So I think in that perspective, I think that's why I said ELSS is probably one of the best financial instruments available in India. Too bad that going forward, I think in the new tax code, it might not be, it's not there. All right. So the other thing here is, if we look at a typical investor behavior into tax saving investments, it is noticeable that many investors rush during the final months of the financial year to meet their tax planning requirements. Now, here I would recommend a slightly different approach. At the start of a financial year, one should divide their desired ELSS savings by 12 and initiate the SIP right in the month of April. Now, this approach will have two key advantages. Number one, the improved averaging. So by investing consistently throughout the year, you benefit from the better averaging as compared to investing once every year, right? And number two, this helps you in avoiding year-end pressure. Now, spreading your investments across the year mitigates the stress of accumulating a large sum in the short span of time. Now, and finally, to close the loop in terms of how it can really help in the long-term goal, I think what one should do is attach each ELSS investment to, generally speaking, a retirement goal. Now, why I'm saying this is because people tend to redeem after 3 years, right? So here we have a product which can do great over a couple of periods of time. You have you are forced not to redeem before 3 years. I mean, you can't help it, right? And after that, if you attach a goal of retirement specifically, then I think it's a great nudge for people not to redeem for years to come, right? So in the end, I can only say that one should have an investment horizon of PPF, but invest in ELSS.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.